Ladies and gentlemen, I've listened to the SoFi earnings call twice now, and there were a lot of details that I picked up the second time around that I didn't end up seeing the first time. Maybe that's for you guys as well. So, in this video, I want to go through a fast presentation about all the things that you potentially have missed from the SoFi earnings of Q3 2025. First up, if we don't know, SoFi ends up beating guidance once again. This is so clear. This happens every single quarter. We get a triple beat since they've been a public company, but this time actually extended that growth. If you look to revenue, this was actually one of the largest beats that we've seen from the company at 11.8% beat, then a 23% beat on EBITDA, and then nearly a 40% beat on net income. It usually is in that order, smallest being revenue, highest beats being from net income, but overall, significant triple beat once again. The triple beat, by the way, does not come from EBITDA. It comes from guidance, but guidance was also raised from 31 cents to 37 cents. And to put this into perspective, how the company is growing over time, I wanted to show you guys this quick little reference sheet that I have for each quarter and how the revenue, contribution margin, adjusted EBITDA, and net income has gone over time, all looking in positive directions as we continue to scale the business. The way that the revenue splits out is now more than 50% is coming from contribution profit, where just around 50% is actually coming from those same targets. Now, funnily enough, if we actually go over to the contribution chart like this and actually look at the margins, this is the first quarter where financial services actually has a higher margin than lending. A little bit due to financial services continuing to climb in their margin, but also lending slightly decreasing in their overall margin, and financial services being heavily fee-based. So it's actually worth it more to investors to realize that there's no risk on the other end if they mess this up. But if you end up looking, financial services used to be a negative, like deeply negative contributing segment of their business, now being the most profitable in the entire company. Next, I wanted to talk about guidance for 2025, where they ended up bringing up member growth of at least 3.5 million, or approximately 34% growth from 2024 levels.